Welcome back to Biz Talk, everyone. I am Rachel Weaver, your host for today, and I am excited to have with me Jake Linville. Jake, it is such an honor and pleasure to have you with us. Jake is a certified public accountant that specializes in providing expert guidance tailored to the needs of businesses and individuals. With extensive experience in controllership, public accounting, income tax, cost accounting, and software, Jake is uniquely positioned to assist any size business in achieving financial goals. Jake is passionate about implementing and integrating cost-effective software solutions that significantly impact financial operations while adding effective controls. Jake, thank you for being with us today. I am so excited to dive right in to talking about business efficiency and cost control in your business.
Thanks for having me. I'm excited to talk about this too.
So can you tell us what strategies can we employ to streamline our business operations and reduce unnecessary costs?
That's a great question. So first, just don't assume just because that's the way it's always been done, that that's the best way to do it. There are multiple ways or strategies to approach this. If you're in a manufacturing setting, you can do a time study or hire someone to do a time study where they can do a sampling of how much time it takes your employees to do X, Y, and Z, and then they can possibly recommend improvements. If you're looking for improvements in the back office, you can hire someone like myself, where I can come in and visit with your team and learn your back office processes and bottlenecks. And then I can propose various investment options to increase efficiency and reinvest that employee's time elsewhere. So basically what I'd like to do is come in, find where your employees are wasting their time, and find out how you can invest in software, etc., so you can keep your employees and reinvest their time somewhere else. There are some companies out there that specialize in cost reduction strategies. They get you to sign a contract at no cost to you if they can help you in exchange for a percent of the savings that they find for you. So initially these sound like a scam, but there are a few professional companies out there that actually do this. It's worth your time to invest in it. So those are a few strategies that I would use.
I love that. Thank you. That is great information to put into place. Now, can you tell us, how can we evaluate the ROI or return on investment for various business processes and technologies? There's so many different things out there. How do we evaluate what our ROI is going to be?
Great question. So it's actually pretty simple. I know there are a lot of different options out there as to what you can do to make your business work more efficiently and more effectively. However, when you boil it down, it's really quite easy. So once you get through all the BS that the salesman's trying to sell you on, trying to buy their product or their software, you need to get from them the cost savings that they expect you to receive. And then you need to take those cost savings, those estimates, and divide that into what the cost is. That's how you measure your ROI. There are multiple ways to do it. You can look at how quickly, are you going to get it back in a couple of months? Are you going to get it back in a couple of years? If it's going to take more than a couple of years, I would recommend you use the net present value approach. So what that does is it boils it down so you can take the present value of all of those future dollars and compare different projects. So especially when you're investigating things, don't just look at one solution, look at multiple solutions. and then compare those ROIs or those net present values. So which of those is going to be the best net increase of value to your company? Also, you want to compare or make sure that the solution fits with your company values and goals. Does the solution require you to hire additional people? And if it does that additional cost pay for itself? And how soon does it pay for itself? Those are the things that I would consider.
Very good. Super important to understand, because we are consistently being pitched to for all the latest and greatest technologies, especially as AI is advancing. More and more people are trying to sell us something different. So what role does financial data analysis play in identifying areas where my business can become much more efficient?
It's a great question as well. So it plays a role in how you're doing, and if you're doing your very best at what you do, and comparing it to yourself, and then to your competitors or the industry at large. So capturing the data that's most important to you. So thinking about what you care about most as a business owner, whatever it is, is it average price per unit that you're getting in sales? Is it the average cost per unit? Is it the average time per unit of work? Is it whatever it is? Find out what that is, and we can start putting it down on paper. You can establish these key performance indicators, which is what you actually care about, and then measure yourself against yourself monthly, quarterly, annually. And then once you've figured that out, you can start comparing yourself to the industry at large and or publicly traded companies that are in the same industry. Even though those publicly traded companies have big dollars, you can still compare yourself to them. It doesn't matter. Numbers are numbers. So whether it's $1 million or $1 billion, you can still boil that down and compare yourself and see how well you're doing against the big boys that are playing, and see how well you can compete. What I would look at is your asset turnover ratio. So just take your sales, ideally your cash sales, and divide that into the assets that you have. So the top number is sales, bottom number is assets. The higher that ratio, the better. That basically means the assets that you have, you're using those really well to generate sales. Or if the number's low, that means you need to reinvest in assets or get rid of some so that you can have a better ratio. I also would look at the debt to equity ratio. Are you carrying too much debt? And the quick ratio, which is, are you able to meet your current obligations? So take your cash and anything that's quickly liquid and divide that into what your liabilities are. The higher that number is, the better you are off. Those are how I would look at things. And a few more things. So it's not only just what you care about, maybe what your customers care about. So what are your customers complaining about? What are your employees complaining about? And if you are not the owner, what are the owners complaining about? Listen to them, and then you can boil those down into comparatives and figure out ways to improve yourself.
Wow, very great information. Thank you so much for sharing all of this wonderful insight with us today, Jake. Can you tell the audience, where can they find you?
Sure. You can go to bookmycpa.com. And right now we're running a new client promotion. So if you go to our website, you can see it right there on the screen. Click that white button in the middle on pricing. Find the service that you're interested in, enter code TAX for 25% off for any income tax and bookkeeping services. And we also include KPI dashboards with our bookkeeping. So if you're interested in KPIs, give me a call.
Very good. Thank you so much. It was such an honor and pleasure to have you with us today. Thank you for tuning in to Biz Talk, and we will see you all again next time. Thank you.
This has been a Now Media Networks feature presentation. All rights reserved.